Mathematical rates that defy standard tokenomics knowledge are being used to describe the destruction's acceleration. Over the last day, the burn rate of Shiba Inu exploded by 5,762%, permanently wiping out 26.2 million tokens through a series of coordinated elimination transactions that show how the supply may be reduced at unprecedented volumes. Gradual supply management is not being used here. Most holders were so engrossed in the daily price changes that they failed to notice the deliberate annihilation occurring through sophisticated burn mechanisms. Permanent scarcity circumstances are created by the 5,700. This alters the mathematical basis of the ecosystem. The precise timing of this fire surge reveals institutional-level coordination, not organic community behavior. Synchronized elimination transactions involving multiple wallet addresses indicate advanced preparation and capital. Optimal allocation occurs under circumstances when mathematical advantages are hardly appreciated by retailers, and this allocation is tailored to maximize the impact on supply under such conditions. Data from recent burns backs up the accelerated pattern that experts have been forecasting for months. On a daily basis, routine operating procedures are used to destroy thousands of tokens. Instead of a slow decline over long periods of time, this 5.62% increase signifies a quantum leap in elimination efficiency that changes supply economics in a matter of hours. There is immediate mathematical pressure due to the destruction of 26.2 million tokens, which markets sometimes fail to fully appreciate in the early stages. When looking at past burn explosions like this one, it becomes clear that supply elimination events with more than 20 million tokens have compound scarcity effects, which impact market dynamics for 729 6-hour intervals after the confirmation of destruction. Looking past the statistics, though, you can see what makes this burn surge so remarkable. The process demonstrates a high level of comprehension regarding the best timing for destruction. When retail trading volume is minimal, professional entities can maximize burn effectiveness by letting mathematical scarcity build up before speculative trading gets in the way of natural price discovery. Regardless of changes in market opinion, the asymmetric benefits created by the permanence of removal will accrue over time to the remaining token holders. There will be long-term mathematical pressure to maintain appreciation regardless of short-term volatility patterns, since these 26.2 million destroyed tokens will remain permanently gone, unlike brief market interventions that evaporate when capital withdraws. Verification of smart contracts ensures the permanent nature of these removals by means of dead wallet transfers, which cannot be revived, reissued, or reintroduced into circulation via any technological process. This irreversible devastation, rather than reversing over market cycles, accrues scarcity effects, establishing mathematical underpinnings that time amplifies rather than lessens. Complex coordination across various transaction vectors is exposed by the burn acceleration methodology. This surge used scattered destruction patterns to enhance mathematical impact while limiting speculative trade interference during the accumulation period rather than single huge eliminations that cause immediate market recognition. The success of the burn timing strategy is supported by exchange reserve analysis. Conventional supply-demand models significantly underestimate the composite scarcity impacts of decreased circulation velocity and rapid destruction. There are strategic ramifications beyond basic arithmetic when examining the behavior of the Bitcoin market during systematic elimination stages. When destruction costs surpass $300,000 at today's market rates, it's a sign that institutions are confident in the long-term prospects for value appreciation. Unless the expected growth in value warrants the long-term capital allocation, entities will not sell assets with a value in the hundreds of thousands of dollars. Upon examination of post-burn trading patterns across key exchanges, changes in market microstructure become apparent. Professional traders posture for increased volatility potential caused by burn-induced scarcity effects, and a decrease in accessible supply causes thinner order books, which in turn accentuate price fluctuations. The effect on holder behavior goes beyond the arithmetic of supply reduction, as shown by the psychological effects of systematic burn occurrences, as holders realize that surviving positions profit from systematic destruction through improved scarcity without needing more investment or risk assumption. Selling pressure often decreases following major elimination announcements. The importance of the burn explosion to the dynamics of long-term prices is corroborated by token velocity measurements. When circulation velocity drops and destruction speeds up, compound mathematical pressure increases exponentially, not linearly. Rather than offering short-term trading possibilities, this 5,762% spike disrupts velocity, which favors prolonged appreciation. Systematic burns must weigh the benefits of reducing supply against the operational requirements that rely on sufficient token availability for ecosystem functionality, which raises concerns about network security. A deep comprehension of the ideal elimination levels that optimize scarcity without interfering with network operations is on display in this burn rush. International regulators prefer active supply management projects over static tokenomics models. Regulatory frameworks see systematic burn programs like this 5,762% explosion as professional ecosystem stewardship, not speculative manipulation, and they provide evidence of responsible economic management. This particular burn surge is of great importance, and the compound impact shows why. When numerous elimination mechanisms are activated at the same time, the result is exponential destruction instead of linear decline in supply. If community initiatives, strategic burning, and operational burns all happen at the same time, that would be ideal. The total effect of Windows is greater than the sum of its parts. According to game theory, it makes more sense to carry out large burns when market uncertainty is high, rather than when strength is low. To maximize the number of tokens destroyed per dollar spent during consolidation, it is best to plan for a barrier appreciation when markets figure out the implications of scarcity through natural price discovery methods. The technology infrastructure that supports these eliminations attracts institutional attention-seeking, professionally managed tokenomics, rather than community-dependent economic policies. This infrastructure exhibits advanced smart contract capabilities. Ecosystem maturity is shown by efficient, secure, and verifiable destruction procedures, which are required by institutional compliance departments. Systematic burn programs, as opposed to speculative trading volume or marketing efforts alone, produce more sustainable price appreciation, according to academic research. When markets are unpredictable, sentiment-based appreciation can't keep up with the demands, but the mathematical certainty of permanent supply decrease can. Instead of being a theoretical possibility, this 5,000, along with development milestones, partnership announcements, and adoption, professional management coordinates fires. Enzymes that, when used in conjunction with ideal market circumstances, increase mathematical pressure. The mathematical pressure for sustained price appreciation is growing, surpassing the current market recognition among retail participants who are more concerned with daily volatility than fundamental transformation signals. This acceleration is happening every day as systematic destruction speeds up. Coordinated elimination strategies are implemented, and ecosystem development keeps increasing utility demand. There is a systematic increase in mathematical pressure. Scarcity is now a permanent reality. Removing supplies has been verified. Keep your positioning in check until the markets realize that 5,000